All right, so we're halfway through the year, and today I want to talk about what's going on a macro level, and then I'll follow up this video with a more local uh, view of what's going on in our housing market. So let's just go right into it. I'm going to be sharing some pictures with you guys from the Altos Research YouTube channel that you guys can go check out. I highly encourage you to do so. It's free and there's so much great data for you to help you make a decision on, whether you want to buy or sell real estate. Okay, so the first thing that I want to talk about is what's going on with inventory. So we're in July, and you can see this dark red line, that's this year, and the light red line is last year. And you can see for the remaining part of the year, we are going to have negative year over year inventory levels. And their projection is that, it's going to be on track with more historical seasonal norms. You can see, like, back in 2022, you can see inventory just hit like all-time lows in that first quarter, and then really started to accelerate going into the second, half of the year. And this is because at that time we had interest rates climbing at record paces, the Fed increasing the Fed fund rate at record paces. And basically what happened was all the inventory started to really build and stay on the market a little longer, which also led to higher levels of inventory because sellers weren't as fast to adjust to what was going on in the market. So that's why you can see this build of inventory here. But now we are officially, negative year over year. Don't think that that was going to be a prediction going into this year. But unfortunately, we are now trending more towards lower levels of supply. And, that's just going to potentially lead to a fairly strong, market in the spring of 2024. I think in markets like ours, where inventory levels are even more compressed, I think that it's just going to, be slightly more competitive potentially in the second half of this year. And with inflation continuing to decline and trend downwards, we should see some alleviation with interest rates, which should stimulate demand, which we'll get into a little bit more in a second. The one thing that I want to show you guys is new listing inventory. So that, I think, is one of the highlights that I took from this, was that the new listing inventory really has significantly slowed down. You can see, like, this time last year, we had 115 new listings that came on the market in a week, and this was back in 2022. As of last week, we had 82,000 hit the market. So a pretty significant decline in new listing inventory hitting the market. And, part of that is because we have a certain demographic of people that just straight out own their house, no mortgage, and they don't want to assume a higher mortgage payment. We have a large percentage of people that are locked in that 2 to 4%, and they are hesitant to give up that interest rate because they don't want to get an interest rate at 7%, which makes total sense. And then you have a portion of people that bought, and let's say maybe bought another house, but that interest rate that they have on that investment property is so low that it makes more sense to just rent it out, make the generate the monthly income, and hold that. There's a lot of that going on as well. But you can see here that the level of new listing inventory is significantly down compared to last year. And so as we continue to see less and less, inventory hit the market, and as we trend overall towards, 2021 levels of inventory, you can see that we have had a, positive month over month gain in home price appreciation in terms of the median home price. And from here on out, uh, I think it's going to get a lot easier to compare year over year prices. And actually, when you look at here, this is price of homes newly in contract. You can see as of June, the pending prices of homes that are under contract are higher than last year. So what I think we're going to start seeing price appreciation. I don't think it's going to be anything crazy, but I think we're going to start to see price appreciation uh, as the year progresses. Um, and so the other part to this equation is not just supply, but it's demand. And so this picture, this graph shows you the price reductions as a percentage of available inventory. And you can see that back in 2022, you really started to notice the price reductions accelerate. And that again, we had demand really slowed down because of the affordability issue with higher interest rates. But we're halfway through July, and we have a more seasonal trend happening right now with price reductions. There's no acceleration in price reductions, meaning there's really no signal in the data that shows that we have a cratering in demand. So if demand is somewhat resilient and we're trending more towards 2021 levels of supply, and we're not getting that boost in new listing inventory, that just tells me that we're going to continue to see upward pressure on prices. And if we see some alleviation in interest rates because of declining inflation, we should see that demand pick up, which means we might even see more competition out there. Mike actually believes that given where we're at right now with the data, 2024 spring market should actually look pretty strong. But what we're seeing here right now for the next half of the year is that really it's just things sort of normalizing and stabilizing. So that's what we're seeing. The picture, this graph right here, I really want to share this with you guys, and I've shared this before. But if you are a buyer, the question that you ask yourself is, do I wait for interest rates to drop? And do I wait, for some sort of recession to happen? Well, the question that really you have to ask yourself is how long you want to wait, because, people have, started, this year thinking when there was going to be some sort of major drop in prices or recession, and we haven't seen that. And interest rates have pretty much stayed pretty sticky throughout the year. But if you look at this graph, it shows you that as interest rates drop, if that was to happen, the market really picks up because demand is stimulated. And in an environment where we have limited supply, the available supply actually decreases as interest rates drop. It's when interest rates come up that we see a noticeable increase in available supply. So if you're a buyer and you're going, man, there's not a lot of options, competition is high, I don't really want to deal with that. You may be looking to you may want the market to have higher interest rates for longer because over the course of time, you can see like right here in this inflection point here, interest rates really climb and inventory really climbs. When interest rates drop, you can see the available inventory drop. And that's just because demand is stimulated in a low inventory type of environment. Thus, the absorption rate of that inventory really picks up. And we really don't see any noticeable gains in inventory. Really, at this point, the only way for us to get out of this issue is to build our way out of this problem. And the reality is builders, excuse me, they are not going to bridge that gap and alleviate that pressure with supply and demand anytime soon, just because of the reality that it takes a long time to actually create enough supply to make a difference. So, you know, that is in a nutshell sort of where we're at. I think that we're going to continue to see, you know, upward pressure on prices. We're going to see, you know, more seasonal trends with inventory. I think that, you know, sales are going to be down, you know, as we continue on through the year. And, you know, as a buyer, really the thing you have to ask yourself is, you know, do I want to be in a position or in a market where, you know, I have lower rates but more competition, or higher rates and a more stable environment, which in our marketplace, you know, stable really still is somewhat of a seller's market and somewhat of a competitive market, just because our inventory shortage is a little bit more severe. So, and I'll get into some more details on our market specifically, but that's where we're at according to Altos Research of in terms of the housing market as a country. So, if you guys have any questions on this, you know, please let me know. I hope this was useful. All right, see you later.